Yeah. Surprise, a little different than you're used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. All right, what's going on, everybody? Welcome to this live stream. I do want to have this conversation because I've been on the phone to mortgage brokers all day today, just trying to find out what's going on with mortgage rates. And if you've been paying attention to the news, a lot of mortgage rates deals were pulled last week, and even more have come out of the market now. And it's quite staggering, the rates that I've been told today, and I want to basically cover that in this live. But more importantly, I actually want to ask the question from you. If you are currently in a position where you are looking to shop around because your mortgage is either due or you're a first-time buyer and you're looking at mortgage rates right now, can you please let me know in the comment section down below this video if you're watching on replay, or in the chat if you're with me live right now, what rates you're finding on the market right now? Because I'm not going to lie, this whole thing around the Bank of England base rate going from 4.5% to 5% had spooked the hell out of the mortgage market, and the rates I've been quoted today are bonkers. It's absolutely insane. So I want to cover a little bit of that, but first and foremost, I just want to maybe just cover a few elements on the news as well, because I think that's going to be really, really important to make sure that we really get all of the context that we basically need. So this is the BBC here, and it's saying here that mortgage rates, average 2-year fixed rate rises by £35 a month. That's an average 2-year fixed rate, it's saying here. But more interestingly, down in this element right here, it's saying that according to data from Money Facts given to 5 Lives Wake Up to Money, the average 2-year fixed rate on a £200,000 mortgage over a 25-year term is now 5.64%. Pretty mad. Now, comparison to where it was before the latest inflation update, which saw inflation come down from 10.1 to 8.7%, it was 5.34%, so a 0.3% increase. And we are hearing all the way across a lot of the news outlets that all of the lenders have started to put up their mortgage deals, and in fact a couple of them have started to pull out of their mortgage deals, or pull them from the markets with very, very short notice, because they're spooked and they're unsure about how and what rates are going to be available that they're going to be able to secure money at in order to lend money out to mortgage holders and first-time buyers and still be within a profit. It's pretty scary right now. And the other thing that I've seen as well today that I've actually clocked in the news outlets are further conversations, and this is an interesting one. In a bid to bring down mortgage costs, what they found is that they've recorded 90% of all loans taken out by first-time buyers in March. So this is only recently, were for 35 years or longer. Now, if you don't know how that basically works, when you're taking out a mortgage, obviously, what tends to happen is you go for a term, right? Now, if you're relatively young, you're in your 20s or maybe in your 30s, you can afford to take a 30, 35-year term. But obviously, the longer you take that mortgage term out for, the more it's going to cost you in interest over the long term, because the mortgage is taken out for a much longer period of time. If you keep that term, it's much, much longer. Because rates are so expensive right now, what we're finding is people are now taking out, and the average length for a mortgage is now 35 years, which is absolutely huge. Now, this is what I found today, and this is the interesting piece that I kind of maybe want to share with you guys, just so that we can kind of have a little conversation about this. I just need to tweak something very quickly, guys. Bear me 1 second. There we go. Let's bring that up a little bit. And let's also bring that up a little bit as well, just to brighten this up a little bit. The other thing I wanted to kind of just talk about is the fact that I today looked at how it would work if you were to remortgage your property and you had a loan to value of, say, 43%. So 43% loan to value. Now, typically in mortgage land, the higher or the lower your loan to value, the better the rates you should have available to you. So, for example, if you have a 10% or 5% deposit, your loan to value is going to be 90 or 95%. And from a lender's point of view, that represents more risk to them because they're lending more money in this deal. Now, typically, if you have a 40%, 50% loan to value, that means you've got equity or you've got a large deposit. That should automatically give you access to better rates. And what I found really, really interesting today, speaking to some mortgage brokers, is that the rates as they currently are right now on the market in this instance today, it didn't matter whether I had a 43% loan to value or a 63% loan to value, the rates being quoted were between 4.99, that was the lowest, and 5.21, which is mad. It is absolutely crazy. Now, when I do these lives, I always try and figure out, well, where's the silver lining in this? I was on Channel 5 News last week talking about property prices, because it was in the news at that point that property prices had fallen by the largest amount for 14 years. And I said in my segment on Channel 5 News, I said that we are in a position now where we are essentially resetting. And I've spoken about this in the last live where we talked about interest rates. When you look at interest rates from the 1980s to 1990, our rates at the moment at 4.5%, the base rate being at 4.5%, is pretty low historically, and it feels as though we're repositioning to become more accustomed to a new norm. But the trouble and the issue that I have with this is, how are people going to afford their mortgage? Now, I find myself in a really, really lucky position where my mortgage is up in October. I'm one of the 1.4 million people who have their mortgages come to an end. I can start shopping around 6 months in advance. So I'm looking around right now, and I'm in a luxurious position where I could pay off a large chunk of my mortgage if I needed to, because if I didn't, essentially what I'm going to experience is my mortgage payment is going to go up by 200-300 quid. I only have a relatively small mortgage. So I'm now thinking, actually paying a massive chunk of it off, or paying it off completely, just so that I don't have to be worried about where interest rates are going to go. But not everybody is going to be in a position where I am, where they can afford to make huge overpayments on their mortgage to try and manage their cost on a monthly basis as they try to fix for maybe the next 2, 3, or 5 years. And I'm really concerned. I'm really, really concerned around how people are going to afford this, particularly if you have car finance, you've got all kinds of other debt that you're servicing as well. This is going to be a really, really, really tough gig. I do want to show you guys one other thing, and this is something that we keep referencing to back on the channel here, and we talk about forecast. Okay, so the last time I did this was last week, and the video was talking about mortgage rate hikes. Okay, and this is the forecast for the UK. Now, this forecast right here, let me just see if I can highlight this, if it will let me. This right here has actually changed. So this is the forecast for interest rates for the rest of the year for the UK. 4.5% right now. In Q2, 4.75. So we already know that there are bets on at the moment that the bank rate is going to go from 4.5 to 5.5%. They've actually revised this because in Q3 and Q4, the interest rate forecast was lower than this. I think it was about 4.75 or so. So this has been pushed up as well in line with it. Now, if by Q3, Q4, the bank rate is at 5%, the question is, what impact is that going to have to mortgage rates? And the honest truth is, I don't know. I really don't know. And a lot of this now is pie in the sky. Let's see what happens, because nobody has a real good inkling of how this is all going to pan out. What I do know is a lot of people are going to find it extremely difficult. And again, I would love to know in the comments or in the chat, what rate are you guys being offered at this point in time? Part of me feels as though the rates that I've been quoted today are a knee-jerk reaction to what's happening right now. And hopefully, I'm hoping, fingers crossed, I'm hoping that in 2 to 3 weeks' time, once we kind of know where the Bank of England base rate is going to go, some of these deals will come back on the market and they'll be at a better price than what's been quoted today. But 4.99 being the cheapest mortgage for 43% loan to value is mind boggling. And the crazy thing is, it didn't make any difference if you went from 43% loan to value to 63% loan to value. The ranges of mortgage rates available were exactly the same. The lowest was 4.99. The highest that I was offered was 5.21. And that's with a pretty decent loan to value. I hate to think what it will be if you are in that 80%, 90%, 95% loan to value element. And I have to ask how this will impact things like the 100% mortgage offer that Skipton launched that I covered on the channel about 2, maybe 3 weeks ago. We're at uncertain times is an understatement, but I'm hoping, fingers crossed, that this kind of mellows out and we kind of get back to some kind of sensible pricing within the mortgage rates. But there are so many variables in this that we can't control it, and it may in the end be wishful thinking. I'm just going to see what you guys are saying in the chat before we actually call this a day. Let me just shift over a couple of things though, just to make sure I get the setup all right and good for the comments to actually come through as well. So Visual saying here, I'm getting a rate of 0% thanks to one of my parents' life insurance and life savings. I'm still waiting for price drops. I've gotten really lucky, but I've been waiting years for this crash. You know what? And take advantage of it whilst you can as well. I mean, my thought process is, and this is where perhaps it is, you have to make decisions that are right for you. Because on one hand, there is the argument to deploy cash into investments, even you go and buy properties now, but becoming a landlord is even more unattractive now with Section 24. So there are arguments to deploy cash into property investments, so on and so forth. I'm not a property expert, so it's not really my bag. So there's that decision, and paying down the mortgage to kind of set up and just manage my own outgoings and be potentially mortgage free. You have to make a decision that works best for you. And there is so much noise on social media that you have to be able to take that decision with everything kind of built into the context of the circumstances that you find yourself as well. But you're in a really good position, mate. Someone's saying, he's also saying here that 40-year mortgages could become the norm. First-time buyers with 2-year fixed finish soon would need longer terms, 100%. I mean, I'm saying to people that, if you are going to fix, to try and make sure that you can manage your money properly and plan financially over the next, short period of time, 3 years, 4 years, 5 years, a fixed rate is the best way to go. But, unfortunately, oh dear, tough decisions ahead. Don't even know what rate I'll get. Look, what I would suggest there is, please go and speak to a mortgage broker or one of the mortgage providers. You have to keep your ears to the ground. I mean, they're not going to be able to tell you what's coming around the corner because that's impossible. They don't even know. But the sooner you start having these conversations. And the other thing, which I've not actually touched on at the moment, is affordability. Okay, so I'm really, really lucky. I have zero debts beyond my mortgage, my small mortgage. That is, I don't have credit cards. I don't have car finance. I don't have personal loans. I don't have overdrafts. I have nothing. So I will pass affordability because I don't have any debts. I don't have any children. But if you're in a family where you have kids and you're paying childcare and you have a car and finance, you have credit cards, you have overdrafts, you have personal loans, that will decimate your affordability from a lending point of view. So it's really, really important to kind of understand how your personal circumstances are likely to impact your affordability. Because yes, the rate that you're going to be offered is important, but if affordability is tight, if you think that your rate is already expensive, sometimes they will jack up the rate because it's tight on the affordability, and to them, you're higher risk. So if you're looking to buy your first home or you're looking to remortgage, I would strongly recommend you start looking at whatever debt you have and trying to clear them as much as possible, because this is where it gets very, very difficult, where in low interest rate environments, people have enjoyed and gone and bought things that they shouldn't have bought on finance. This is where those kind of decisions can come back to haunt you a little bit. So speak to a mortgage advisor, because you need to know what rate you're going to get, and you also need to be taken through affordability as well. Very, 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 very important. Let me just find my mouse. Where did it go? Where are we? Here we go. All right. Okay. Yeah, Owen saying, yeah, I know. Unfortunately, I am with Sky, and I've moved my office from downstairs to upstairs, and I've had issues in this room when it comes to my Wi-Fi connection. So my contract is up in. Actually, I can start looking around. I think I'll start looking around now. So I think I'm going to be jumping over to Virgin, because apparently they have really, really good internet and really, really strong connections. But because since I've moved, my internet has just gone down. It's gone down the slope, really. So the quality of my streams have been frustratingly annoying. But there will be a fix for that. But thank you for bearing with me. Spencer's just saying here, my mortgage rate is 4.7 billion, but in overpaying by £1,000 a month. So I should have my mortgage paid off next March. Happy days, I hope. Mate, that's a really good position to be in. Well done. Well done. Keep going with that. Carly's just saying here, I'm trying to fix in at 4.99 and I feel grateful. Gone are the 1.39% old days. I mean, look, my mortgage that is coming off its fixed rate in October is at 1.49%. How mad is that? So 1.49% to be offered 4.99% as the minimum as of today. And I have to stress that, because I know for a fact people will be in the comment section saying, well, this didn't age well if rates end up going down again. Like, you have to, these things are a moving target. So hopefully we will get to the point where we'll have more deals come out in the market, and natural competition in the market means that there will be some kind of price negotiation or price placement to put one lender in an advantage over another. But again, we're wishful thinking here, guys. We really, really are. Gary, I'm lucky because we went on to an offset mortgage at 4.36%, but have managed to fully offset. So we're not worried about the rate. To me, the noise about potential price crash are more concerning. You know what, Gary? If you've got an offset, they're not that common anymore. I certainly haven't come across that many of them, but they are a great, great tool. And offsets allow you to basically still have access to savings, but it offsets your mortgage payment and the interest that you pay on that. It's quite a clever thing. To have. They were very, 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 very popular back in the day when interest rates were very, very good as well. But I haven't seen a lot of them around. But then again, I haven't advised on mortgages for some time either, because I'm not playing in that arena anymore, unfortunately. Or should I say fortunately, because I can do this on YouTube without any compliance gremlins breathing down my neck. Let's see what else we have here. How long do principal mortgage offers last? I was looking to buy next year. Most mortgage offers will probably have like a 3-month period where it will last for. Then you have to reapply, because if rates change, they're not going to allow you to hold on to it for like 12 months. They want to reprice it, and they want you to pull the trigger and get the business through the door so that they start to earn money on the interest as quickly as possible. So typically they'll only last maybe like 3. You might find one for 6 months if you're lucky, but I haven't really seen that many. But I would say 3 would be the default. But again, check with your lender and ask that question directly. You never know what they might say. All right, cool. I think that is all of it. Thank you so much for joining me, by the way, guys. Interesting times at the moment, really, really interesting times at the moment. And if I can offer any kind of, I guess, words of encouragement, just try to control the things that you can control around you, your controllables. That's the only thing you can do. You can't do anything more than that. We can't control inflation and what's going to happen with the Bank of England base rate. We can't control any of the language out there. It's a mess. It's just a mess. I mean, Rishi was talking about bringing, and this is the thing that's driving it all. The fact that Rishi, one of his, I think it was even promise number 1, was cutting inflation by half. You know, things are not going according to plan. I mean, the inflation number should be 7.5%, and you would think that with inflation coming down from 10.1 to 8.7, they would be happy. But I think they're using this as the opportunity to push further to try and get it below, or at least in line with their target for Q2. I just think there are so many moving parts. I hope they get it right. Oh, guys, thank you so much for watching. Catch you soon. Have a good one.